Hi folks, very happy to be back. I've taken a longer break than I should have, and I'm very happy to be here with a new video. I believe it's the most important, probably the most informative and helpful financial-wise video that I've done, that I've written and filmed so far. I hope you really enjoy it, so leave your like, subscribe, and let's get going. So despite all this successful prognosis before and great success with individual stock pickings, I found a better and safer strategy, which I believe to be VFV. Just simply holding it, buying it, adding to it every couple of months when I have the spare money. Safer strategy that doesn't make me worry about the performance of one particular company. I'm not stressed if the company receives some bad news or has a bad quarter and then it goes down by 30%, for example. I don't need to stay up and keep reading on the news to actively risk manage my investments. I just set it and forget it. And every month try to add a little more. That's basically the lesson that I've learned despite having extreme success with individual stock pickings in the last couple of years. That's the main message of this video, I guess. I found a better and safer strategy, and now I'm just sharing it with you guys. VFV is a Vanguard ETF that tracks the S&P 500 performance. In layman terms, you're betting on the US economy and its strongest 500 companies. Large cap, the biggest companies, the best performing ones. Historically, it has been one of the best investments one can make, as on average in the last 50 years, the S&P 500 had returned 10 to 11% on the annual basis. It is similar to just outright investing into the S&P 500, just a tad easier and a little more straightforward, as it is bundled up for Canadians already and is represented in the Canadian dollars. I will peek at my screen from time to time because I've written a lot of text, none of that AI nonsense, all written by myself with my own examples, and it's just too much to remember. I don't like using teleprompter because it's too robotic, so I hope you guys don't mind. I will be looking at my screen sometimes. As a testament to my competency, I'm advising you to look back at my older videos from 2022 when I suggested to purchase CIBC when it sat at around $50 per share, which has doubled since then, or Nvidia, I suggested to buy when it sat at 120 2 years ago, and even Google when it dropped to $90. Back then, I also suggested to all of my viewers to consider getting VFV when it sat at around $92 per share, which is now sitting at 152. All this to say that when I do recommend something or I share my experience, I'm putting it out there publicly, you better believe that I follow all that myself. For me, it's just a financial journal, basically a financial diary of a Canadian investor. You can call it that for sure. I'm sharing my knowledge, my mistakes, my successes, so people can learn from it, maybe find something helpful, something new. And today, I believe this is the best investing video that I've made because I found a strategy that I believe works the best. Despite the fact that my individual stock picking has been successful, I decided to stop doing that because it's just too risky and it's too much work. And let me explain why. Let's talk about most recent examples to make it more relevant and simplify things a bit. If you had invested $10,000 precisely 5 years ago into the VFV, you would have $21,500 today. So over 100% growth on your investment in less than 5 years. Just last year alone, VFV returned almost 38%. Sure, it won't happen every year. And some years you might be down, some years you might be up. But again, the average, the math works out to be 10% a year average returns in any scenario. Good and bad years combined. I mean, you can probably get more if you invest in some individual stocks. Let's say in a hypothetical scenario that you invest in Google today at $195 per share, and then it goes to $400 next year. So 100% growth in a year. Could it happen? Sure. It could also go down though. For the most recent example, look at what happened with Bell Canada last year. That could very well happen to any successful company today. So buying a fund that has over 500 of the best performing large cap companies is an easier and all around safer strategy. In a long-term horizon, 10 to 15 years, VFV will still outperform any individual stock that you can pick today. You can win 1 year, but it's too much hassle. You always stressed, you're always worrying how your particular stock that you've chosen is going to perform that year. I guess it's just safer and all around better approach to investing than trying to pick that one individual company that will do you a 10x next year. It's very unlikely. There aren't many Nvidias of the world right now. And the fact that you're going to choose one company that's going to do a 100% return in a year or 1,000% return in a year is just very unlikely. Let's be honest. We Canadians have quite a few options to choose from. Very solid, very popular ETFs such as XEQT, VEQT, or VFV. These are the most popular, and it doesn't matter how many videos you're about to watch on this topic, you'll pretty much always end up with these three. As far as Americans go, they have VOO as their best option. Another benefit of this strategy: you won't have to pay any fees since you're basically managing all of your investments yourself. Forget about the 1% management fee you would usually pay for an advisor, or 0.5% fee for the robo-advisor, like what Simple does, for example. The ETF is being managed by the company already, which is the Vanguard in our case, to which you pay a very small 0.09% fee annually. Now compare this to 1% annual wealth manager fee who can't even guarantee the same returns in most of the situations. Not very good. And I really believe you should just invest it and manage it yourself, so you don't have to pay any fees besides that 0.09% management fee. Let me know in the comments if you'd like this video, if you have any advice, any suggestions for myself, if you'd like to share maybe your perspective and your approach when it comes to investments. I would be glad to participate in any conversation and hear some alternative views to my strategy. Reach out anytime. My Instagram is open, my Gmail is also listed, and see you soon.